Hey guys, good evening. It's Sunday, July 24th. Just wanted to do a kind of a recap of last week and kind of what I'm thinking to start the week for tonight and into tomorrow. But I was just looking at the long bond. It's the same thing we've been talking about since the middle part of last week is that, we're getting this intermediate term pullback within the context of the longer term uptrend. So this is still the ideal place that I want to buy. It's down around these lower bands. And we can see on the 4-hour chart, this pullback is, this 168.29, just call it 170 area. This is right in line with the pie line. So this pullback is really just kind of completing a cycle back to pie here. So it makes sense for the market to kind of check up and want to hold this area. You can kind of see we've been trading it around. So I was anticipating this intermediate term downtrend once you started breaking these higher lows, and then you can see the actual bands roll over in a nice wave formation, and this is the downtrend that's been in place. So it depends on how you play it. I mean, if you were day trading most of this move, you'd be better off playing it from the short side. But anyway, so I was anticipating a bigger pullback once we kind of started to roll over here on the hourly. So when that tends to play out, when I start buying initially, it's pretty light with the idea of getting heavier in my size back in this area. And then I'm not afraid to trade it around if I'm anticipating, an intermediate term downtrend. So anything you bought well here, you take a piece off. You buy well again here, which is I'm still holding on to the futures here. But you can see my buys in here as we bought some 171 strike calls, just flip those out. So it's more of the same. I'm going to keep trading this around, and then any type of pullback. Again, you saw the buyers come in pretty well here. This is actually shows up on the 4-hour chart as a nice bottoming tail candle. You can see that right here. So that shows you the accumulation. So I expect more of the same. Any type of pullback we get back here towards 170. We'll see if we even test pi. And then you can also see this downward regression channel is coming in the same area. So that's kind of the game plan for the bond. And then to really change the momentum back positive, you got to get above 172.5 and start making higher highs on the hourly, and then this thing can get some legs and move back higher. So that's it. As far as the belly, if a lot of times I'll leg around, I'll leg into the flattener. So if I'm long bonds, 30s or 10s, you can sell some 2s or 5s when the market gets overbought. So the time to do that was, here in middle of February, April, May, and then obviously up here. And then you're supposed to be covering back your 5s. So I'm flat 5s. I don't have any position, but the next rally back up, it makes sense to sell some 5s back up here. Another 10 ticks higher, half a point higher. As far as the equity markets, did a lot of analysis this weekend, updating the preferred portfolio product, which is again for our investors, the longer term traders or investors, and some pretty interesting themes that came up there. I'll probably post those in the room as we go this week. But stocks, I mean, we completed another 8.6 cycle count from the middle of July, and still no signs of cracking. So we still haven't taken out the swing line that I was referencing last week. So this is going to be like 18 or 19 days come Monday where we haven't been able to close below the prior day's low, which is just, I mean, those types of runs, it's just amazing. So we do get a nice sell setup here when we take out the prior day's low. I'm fine with shorting that. Your risk can be above that candle or the prior highs up here around 2170. But Well, we'll just let price come to us. It's possible we can push back up here to 2200 even. So I don't doubt this market at all. Um, its ability for U.S. stock market to move to new highs, it's just hard to keep them down. But that said, we're still late cycle. Big picture from the lows off of '09. I didn't look at what we have for data this week or what the calendar looks like. It's worth noting though on the Russell. Let's see. Alright, so here's the big picture trend on the Russell. You can see this is just, I mean, look, this wave formation is a good visual of the uptrend it's been in. And so February it held where it needed to hold down here to really keep the longer term trend intact. So that was, for the market, for the Russell to hold there, it's actually pretty positive long term. That was the spot that it really needed to hold, and it did. So, but from here, this move here, we're back towards the highs from the end of the year. But the Russell's not back to the highs from last year, even though the Dow's through. S&Ps are flirting with passing above the highs from last year. But the Russell just shows you that the growth names were the hardest to correct in the beginning of the year, and so now the bounce back for them not to quite be back to their all-time highs makes a lot of sense. So I think you wouldn't be surprised if we get a lower high up here around 1250. But I'm not short the Russell. I'm not. It doesn't really interest me. It's just too bullish on the the daily chart. Even after Brexit, you made another higher low. So maybe if we push 1250, 1275, I mean the edge at that point would definitely be on the short side. But from here, I'd rather buy the next dip. If we get a correction, I mean I'm long S&P puts, so if I get a chance to come out of some of those, you know, getting long the Russell is just late cycle like this where we are in the economy. It's just, I'd rather buy the Dow, which is making new highs. So I'm going to stick with that game plan, just keeping an eye on the Russell. I think it's worth noting that it's definitely the weakest compared to the NASDAQ and the Dow, as it has not been able to get back to its old highs. So my game plan is going to stay the same. When we get really overbought in S&Ps, we'll play a few puts. And then you can buy the Dow on the deep dips like we did after Brexit against some of your shorts. And that played out pretty well. Pretty much bought the low down there. So still long Dow futures. Just been kind of trading it around more on the intermediate term. Let's just start the week tomorrow. I think if you get a chance, this is for support 18,400. If you do trade below that, technically you might have to have some more caution here, because then we'll be making lower lows on the hourly, and that kind of makes me think we'll see 18,220 here, which is pi. So that's kind of the two main points now on the Dow is this 18,400 level. The top of the range is the highs from last week, 18,565. And I mentioned the preferred portfolio. That was our newest play on the long side, as we added the Chipotle. And I get all the short-term concerns with Chipotle. Obviously, they're still doing a lot of issues surrounding that health scare and everything associated with that, litigation, whatever other crap that's coming down on them from the regulatory powers that be. But I think long term, this is a buying opportunity. So maybe it trades at 300, but I think the fact that it held the beginning of the year down here around 400 two small bottoming wicks right here on the monthly level shows you that there's a lot of support. So I bought a little bit in front of earnings. We'll see if we get some follow through this week. I don't really particularly like how it closed. I mean, we'll see a stronger closing here above. Keep this candle, the close high within the bar. The fact that it tailed definitely could have been a little bit stronger close, but so far so good. I mean, the risk is below the lows here from 384, so we can work a position. I think we can get a good chance to get a move back up into these highs from March, which is 540 area, 560. So I think that makes a lot of sense. A lot of tech names I think have earnings this week. Still long a little bit of Google. I'm just going to hold that through earnings. But that was a good buy back here at Pi. I mean, the examples are just endless. I was talking to some guys on the team this weekend about the Pi cycle. And how the pound failed right in front of Brexit, right at Pi. So markets are not random, and there's a hidden order and design behind the entire universe, as everything is just wave formation vibration, and it all moves the same. So whether it's your heartbeat has a cycle, weather has a cycle, and the markets are the same. You get the same patterns and cyclical wave formations that form on a fractal basis on all different types of time frames. But I mean, this is just an epic fail showing how the power of Pi right in front of Brexit. So we sold some up there. That was a nice trade. Still short. And the currencies, we want to look for a bounce back in here to 135, 140. Dollars, real quick, is probably still the strongest factor in our model right now. I think we're going to move up here to 99. So I want to stay with long dollar. I want to stay with long bonds. I want to stay with, short certain parts of the commodity market. The softs have been trading really well. I'll send out some stuff this week from the analysis I did over the weekend. But the grains are still bearish. Softs look better. Obviously, gold and silver are still strong. But we'll see if that plays out. We'd like to see some more follow through up here to 98, 99. Same kind of thing on the euro. Start to break that back down below 109.5. We're going to probably get this move into 105, 106. And of course, we'll be trading the pound yen as usual. And that's kind of range bound also. I talked about last week, you really need to break 138. You get below there, then we're going to get a move to this back to Pi here in the hourly, which is like 136.76. And I like this lower high here last week that formed. Tried to rally, couldn't. So you're making lower highs. You actually made a lower low below 139. So I think there's a good chance that this rolls back over. I had sent out a piece on the, if you draw the 30-day in here, that was kind of, that shows you, okay, the market's either going to be defined by this downward moving 30, and we're gonna fail and take out some of these lows around 138, and that give you the move back to 128, 129, or the market's going to regain the 30-day and start to climb back towards, the upper Bollinger Bands would be up here. This is the upper bands on the exponential ribbon bands here. So the fact that the market failed at the 30-day, I think this wants to roll over. So watch 138 is the key there. That probably will give us our move lower. But again, I'll be going over all that in the room this week. So join us, jenkinsrm.com. I'm looking for more traders in the room. We've got guys trading Forex, futures. I'm trading a lot of options. So, and then we also have our active trader membership. We're putting in the real-time signals, alerts, how to work your size, all that type of stuff, going back and forth. Ask me questions. It's good collaboration. So visit us at the site. and I'll talk to you guys later this week.